Okay, part two of the statement of cash flows. Here we are with investing activities. So this should be a shorter video, but it's got some tricky components. And so let's go ahead and start with our step four. That would be where we're at in this video. We already did step one through three in the previous video. So step four, that's an analysis of the plant asset from the balance sheet and if additional information is provided. So let's go ahead and look at our balance sheet. And here we are, long-term assets. So long-term assets, that is our investing activities section of the statement of cash flows. And let's just do just a very brief discussion about investing activities, just so we have that intro. That's the second category listed on the statement of cash flows. And this section reports cash receipts and cash payments that increase or decrease long-term assets, and it includes cash inflow from selling and the cash outflow from purchasing long-term activities. And so we can see here we have our long-term assets section. We have land and plant assets in this section. Let's go and just really quickly review the information that we had provided in this paragraph. They purchased land for $21,100 by financing 100% with a long-term note payable. So that land in the long-term asset section, that was a non-cash activity. So let's just remind ourselves that this is actually not an investing activity. It is a non-cash activity, and so we'll use that later. Okay, perfect. So that land is non-cash, and we'll use that later, but that was that analysis from that paragraph provided to us. That was the 21,100 difference. And so yes, all of that was financed with a note. Okay, so no cash involved. During the year, there were no sales of land, retirement of stock, and no treasury stock transactions. A plant asset was disposed of for $0. Sorry about that. So the plant asset was disposed of for $0, and the cost and accumulated depreciation of that disposed asset was 13,410. We'll need this later because that was a disposal of a plant asset going down, and so that would be 13,410 that we need to account for in this plant assets section. So these plant assets, that is investing. So let's go ahead and label that so we know. So that's what we're analyzing. Let's erase this journal entry. We don't need that anymore. All right, and we know that this was non-cash. As we go down, so we don't forget that what happened there? There we go, that we accounted for everything. And so our plant assets, the difference for them is increased by 10,190. Okay. So we're not done yet because we need to account for that disposal as well, which was 13,410. So let's just write out our analysis as part of step four, just to get us going here. So 2024, yeah, there we go. Let's make a tab. And that plant asset amount was 124,840. Let's make commas so you're not getting confused on what's going on here. All right. And then 2023, and so our difference which is an increase Let's make it look like an actual math. Trying to keep it neat for you. All right, and let's just, that way remember for your notes. There you go. All right, perfect. So this difference included a disposal as well, right, in that paragraph. And that what had it was sold for 0 and it had accumulated depreciation. So we'll need to add that back in as well. It's not liking a lot of my spelling there, huh? And so we end up actually with a difference of 23,600. All right, so we'll go ahead and we can analyze that again. And we can say, okay, well, it increased, our plant assets increased by 23,600. So we must have used more cash to pay for it. So this actually technically not increased only by 10. We analyzed because of the disposal. Also, there was depreciation for the total amount because it was disposal of $0. So we actually have an increase in net plant assets technically for 23,600. So if we were to analyze that, we could say an increase in that fixed asset, and then cash would be the credit if we wanted to analyze that way. But we used more cash. All right, so let's go ahead and do that analysis in our investing section of the statement of cash flows. And there was nothing else. There was nothing else for our long-term assets. We accounted for everything here. This was already accounted for as well with depreciation. And so we're going to go ahead and say we're done with the investing section. So this is just another extra space that they gave us. Leave it blank, not needed. And so our net cash provided by investing activities is actually just minus, oh, we're in the wrong box here. There we go. So that is it for the investing section. We have one more section left, which is our financing section, and we'll finish up our non-cash investing section as well in that section.